Hello and welcome to this week's Forex Outlook here at xm.com. I'm Andreas, your EU investment analyst, and I'm here with our chief economist, Michalis Florentiadis. So Michalis, there is turmoil in equity markets. It was evident during this past week. Maybe investors are starting to challenge valuations. Also, there is a rise in yields that is making bonds relatively more attractive. Can you talk to us a bit more about that, as well as major markets and as well as major developments during this past week?
I think that the equity sell-off has been the dominating story for financial markets. We had quite steep sell-offs a few sessions ago. The fact that we had a repeat yesterday means that markets are now, especially US indices, are 10% off their highs. This is significant because we haven't had such a correction in quite a few years now. And it is very interesting to note how foreign exchange markets are affected by this. It seems that the US dollar did quite well. The yen also did well because it's a traditional safe haven. And however, we are seeing more currencies that are more related to risk appetite, such as the UK pound, the euro to a certain extent, and also the Aussie and the Kiwi are more negatively affected by development. So all in all, it is becoming a factor to foreign exchange, although the movements in FX and in other asset markets have been relatively contained. And I will also note that gold, which is a traditional safe haven, has not gained as much because of this sell-off. And if the concerns were really so intense, we would expect to see gold significantly higher.
Interesting. Maybe it also has to do with the fact that the dollar was rising, it's denominated in dollars. Maybe that played its part.
Absolutely.
So should I move on to the week ahead, Michalis?
I would also note that the Bank of England meeting the week just passed, that was also very significant because now the market is expecting interest rate hikes from the UK a little bit sooner than was otherwise the case. Okay, we had the Deputy Governor speaking about maybe 2 rate hikes in the next year, so nothing too dramatic, of course, but a bit more than the market was expecting. Of course, Brexit is still the main story for the UK pound. We have a lot of volatility there, and but still, this was the big story of the week, and as we said, the pound was also a little bit hit because it was seen as a risk currency. With that, Andreas, what do we have to look forward to in the next week? We had 3 central bank meetings in the week just was. Are we getting more data or central bank meetings next week?
On the face of it, it looks like it's going to be a less exciting one relative to the past one, though markets tend to surprise, so nobody really knows. Starting with Asia, Japan will see the release of Q4 2017 preliminary GDP figures on Tuesday, that is Wednesday, for Asian traders. It is expected to post positive growth for the 8th consecutive quarter. This is the longest such stretch since a period between 1986 and 1989. That was, of course, later with a bubble and a stagnationary period. And continuing with Australia, on Thursday, we'll see the release of its employment report for the month of January. I should say that a strong report on the front of positions related to the economy will not necessarily lead to a stronger Aussie, though. This was the case last month in December, though labour demand outstrips supply and therefore eased wage growth pressures and thus inflationary pressures. As a result, market participants shorted the Aussie, pushing back in time their expectations for a rate hike by the RBA. And unless you have something to add, Michalis, I will move on to Europe.
No, we want to look at Europe, the US, and I think it's going to be a busy week for the UK as well.
Indeed, the UK on Tuesday will see the release of CPI figures for the month of January, and then on Friday, retail sales figures for the same month. Inflation outstrips wage growth, so it will be interesting to see whether this continues to act as a drag on retail sales. Remaining within Europe, the Eurozone will see the second release of Q4 2017 GDP figures on Wednesday, as well as industrial production for the month of December. Germany, Eurozones, and Europe's largest economy, will see on the same day the release of Q4 GDP figures. That's going to be the flash estimate as well as final inflation figures for the month of January. And moving to the other side of the Atlantic, to the US, on Wednesday, it will also see the release of CPI figures as well as data on retail sales. On Thursday, we're going to have some industrial production as well as manufacturing output, which is a subset of industrial output. And then on Friday, we'll see the release of housing starts data, as well as the University of Michigan's preliminary survey on consumer sentiment for the month of February.
So I think all in all, a very busy week for data. I would only add to that, maybe we have to see that the legislation in US Congress passes smoothly and the shutdown is averted. We expect that to happen today. And in addition, we have to watch bond yields and how they are moving and if they are affecting equities and if there's going to be another sell-off or if the sell-off is going to continue or not, of course. Thank you very much, Andreas. Thank you everyone for watching and have a great day.